Welcome to Modeling Accounts, part of the Mastering OnTrajectory tutorial series. In this video, we'll take a closer look at account items and the various criteria used to configure them. As previously mentioned, OnTrajectory requires you to have at least one account, which we often refer to it as your deposit account, and it is always the topmost account on the list. This is where excess funds accumulate, and it's the first place where funds are drawn from if expenses exceed income. So, if you make $5,000 more than you spend, this account increases by $5,000. Conversely, if spending exceeds income, this is where funds are deducted from first. Only after this account is exhausted will OnTrajectory begin to automatically withdraw funds from your other accounts. So think of your deposit account as the default place, like a brokerage or mutual fund account, where you would invest excess income. We see this individual has renamed their deposit account as mutual funds, which is their default investment vehicle. Contributions to other accounts are defined by clicking the Contributions column. A pop-up allows you to designate contributions as either a dollar amount or as a percentage of income. When using a percentage, select which income item should be used so the percentage can be calculated. Note that contributions, like income and expenses, are automatically pegged to inflation, which helps to simplify your saving strategy. However, if you wish to ensure only a certain fixed contribution amount is made to an account, click the Do Not Inflate Contribution checkbox. By clicking the Percent Tax column, we open the Taxes pop-up. This is another area where the deposit account is somewhat unique. OnTrajectory supports centralized tax rates, meaning you can define your taxes in one place for different periods of your life, and those rates will be applied to every income item and gains in every account. But we also support the ability to define tax rates at both an individual account and income level. This is used by individuals who wish to define taxes extremely granularly, but not by typical OnTrajectory users. In any case, centralized tax rates are the default, and you use the deposit account to define them. Simply enter your rate in the effective tax rate field, and it will apply to all years within the range. Notice there are actually two tax rate fields. We use the effective tax rate to calculate taxes on all incomes and gains. However, if you wish to specify a separate gains rate, you may optionally do so. If specified, this rate is applied only to gains, and the effective tax rate is applied to income. The tax type field is set based on the type of account you've added. However, it can be changed at any time. Briefly, there are 5 tax types. Tax annual, which deducts taxes on gains each year they are earned. Tax deferred, which taxes both contributions and gains when withdrawn. This is used for retirement accounts that have pre-tax contributions, such as 401k or traditional IRA. Tax deferred gains only, which taxes gains only when withdrawn. This is typically used for brokerage accounts where you are holding positions long-term. Tax-deferred contributions only, which taxes contributions only when funds are withdrawn. This is often used for rollover accounts that have received pre-tax contributions. And tax-exempt, meaning no taxes are deducted for either contributions or gains. Note that here, as well as in many other places, there's a direct link to our guides, which provide much more information. Another interesting aspect of OnTrajectory is the ability to model investments, such as real estate or art, simply by indicating the current amount of the investment, the rate of growth, and the pertinent taxation. You can also model the equity in your home and calculate how it grows based on the mortgage you have. Just enter your loan information, your equity at the beginning of the loan term, as well as the increasing value of your home, and the overall value for each year will be forecasted into the future. The last column in the accounts table displays each account's calculated balance for the current date. This value is based on the percent growth value you've entered, and it allows you to quickly discern whether your growth assumptions are tracking accurately. You can also use this feature to take a look at future or past dates within your trajectory by selecting the date next to Trajectory 4. This is useful for comparing values from a past quarterly statement, for example. In further video tutorials, we will discuss how to track your progress over time, as well as using other types of growth projections using techniques such as Monte Carlo analysis. So be sure to check them out.